Good morning, everyone. Or, wow, that was a habit. Good afternoon, everyone. Good afternoon, a little bit of a weird one. Hey, everyone. John Henry here, Slingshot Futures Trading Group, SSFTG. Welcome to the daily afternoon market recap and offering overview. Over the next 30 to 60 minutes or so, we're going to be covering what took place today, the trade setups that presented themselves, and as per the usual, these are the ones that are going to be outlined in our Day Trading Academy and VIP trade plans. Now, remember, the review that I'm going to be doing here, I'm going to be talking about every setup that presented itself today, but remember, not all patterns and setups are created equal. The ones that I'm going to be covering here don't use common sense as a filter at all. Going long in a massive downtrend? Sounds good. Shorting the bottom of a range? Good soup, right? You get the picture. I do this to ensure fairness in the patterns and the setup review and no cherry picking, right? So we're going to look at all of the patterns that present themselves, whether they were good, bad, ugly, fantastic, whatever. Don't forget, before we kick this off, smash the like button, let the YouTube algorithm know what's up. Heck, while you're at it, hit the subscribe button if you haven't already too, so you don't miss the next video. If you want to hang out with me for the rest of the day with the rest of the VIPs for the entire U.S. morning session, that morning session goes on for, well, from 9 in the morning until noon, so it's 3 hours every day. You can join or register for a 1-week trial for the private VIP live trade room, and you can see how we operate in the markets in real time while they're moving. You can see the registration link right in the main page of SSFTG there. Trial members also have access to schedule a 30-minute phone call with me to discuss any questions that you have about joining as a member and anything else. And the best part is it's totally free. There's no credit card needed or any of that stuff. I don't like that kind of stuff. So with that said, register today and my... what was that? Register today and get the calendar for a call. Hang on. My son's got a fart machine. I swear to God, my son has a fart machine. Hold on. See? I promise. I swear to God. I don't know why it went off, but it was up by my TV. I have proof. It was the chair. No. Anyway. Good timing. If you have any questions about what it is that we offer or what we have available for you or anything else, anything in between and all that, we do a Q&A time after the charts, and that way you can definitely get all of those covered. So with that out of the way, let's take a look at what happened today on our old buddy, the Nasdaq, and maybe take a look at some other things going on as well. Of course, if you have any questions along the way, you can always shoot me a message, and we'll get those covered for you from there. Again, don't forget the trial registration link and everything is on the front page there. You can get that all covered. But let's dig in. So, as far as today, today was really straightforward. I gotta say, it's one of those types of days that everything just kind of played ball. When it followed the rules, it followed really well. When it didn't follow the rules, it really didn't follow the rules. Like, it totally fell apart. So depending on the approach and the timing that you were looking at, it definitely caused some issues. We can see here that for today there were 4 total patterns, 3 of which were successful and 1 that failed. When I'm talking about the total potential of R is effectively just your risk. A 1R would be a 1 risk. So if you're risking $100 normally, that would be 1R to you. This way it's adjustable to whoever you are, but this makes it so that it's pretty obvious. A 2R is a 2 to 1, a 3R would be a 3 to 1, etc. So just out of the gates here, the first one that we started off was after the market was going really, really choppy, sideways, kind of gross, not a whole lot happening, right? I mean, before we got up to that point, it had a beautiful rally up into Sunday, kind of pulled back a little bit going into the early morning session and then spanning all the way until 8 o'clock. That's how much time passed inside of there before it finally decided to get going. Now, when we're looking, first off, we started off the day with the morning prep and going over all the charts and everything with YouTube members and VIPs and kind of taking a look at what's the anticipation, right? What's the overall trend telling us? Are we long? Are we short? Is it going up, down? Are people happy? Are they disappointed? What's all going on? There's the Pikachu sound. I might have to mute that for a minute. But welcome. Hopefully you got your Pikachu and I just missed it. Either way, we've got this scenario that has a lot of bullish movement to the upside, and they finally are getting a little bit of a pullback. And this is something we've been talking about for quite a while, where I want to see this pullback with an ABCD corrective phase to the bottom of wave 4, that perfect wave cycling in Elliott wave that we all love to see, but in this case it had different plans. It didn't want to do that, but really the overall trend, what is it? I mean, it's still got to consider that it's kind of up, but in the near term we're kind of down, right? We're sort of mixed. And that gave us a scenario that we could actually look on both sides of the fence, look for long opportunities and short opportunities today, with a preference of going long, of course. But, there are some opportunities on both sides when you're in this mishmash mix. We've completed the 5 waves up. We're trying to get a corrective phase down, in the short term, maybe short, but they lost their grip, and we'll see that in a minute here. As we zoomed into the 15-minute chart, we were talking about a lot of other zones of interest, which really didn't come into play. The market just sort of broke away, left them behind, never to return. Right? It's just gone forever. We had that big POC rotation. We can see sellers were really trying to get that going, but it failed. Rotated all the way back up, giant rally higher into what appears to be now a measured correction all the way up. Well, pretty close. Upside objective's now going to be in around the 16,430s. So kind of keep that in mind when we're looking at the Nasdaq in terms of what's going on, because, again, we're going to be looking at all of the patterns, but, right, that doesn't include common sense. Today is a unidirectional, or multi-directional day where buyers and sellers will have a reason and they'll have an opportunity. Looking at the RTH, when we kick things off, we started off with a nice gap to the upside, sort of leaving behind what happened last week, driving in the big pulse down, and that left a lot of shorts underwater. We were talking about this morning on how with this kind of gap up, a lot of sellers might be feeling the squeeze, might be getting pressured a little bit and pushed against. They were. We had a rotation all the way back up to fill the gap from the holidays over here. So all of those gaps on the rally up have been filled and taken care of and all that fun stuff, but this is a really strong move to the upside. Now, looking at the overall setups that took place, again, going back into where we are now, we started off today with a nice rally to the upside, but remember, we can go kind of both directions, up or down. At the moment, the market was pulling back, went a little bit sideways, kind of broke out of this sideways transitional phasing, and really gave an idea that the trend was going to try to continue back to the upside. And within that rotation, that offered up a bounce 5 to the upside, which it didn't set up. I mean, it just chopped right through it. So one thing that's very interesting, we talk about this a lot. Yes, this is a failed pattern. It's a -1R because it's straight to the loss. Didn't even bounce. But this is something that we talk about where if you're managing the trade and you're, not necessarily all in, all out, buying in, selling out, etc., position averaging, you can see what took place when it made its way back up to the break-evens. We'll talk about that a little bit more in depth in a second here. But obviously, there was a really big rotation. A lot of buyers tried getting an L2. They were totally dunked. Here, we're like, well, there's no proof. How do you know? Right there. That's the proof, right? We know they got long and they got out of break-even. So with that rotation, obviously this is a -1R, but look at the time. This is at 9:32. It's 2 minutes after the open. If you've been around the block for more than, a couple steps, you'll realize that trading directly at the open is dangerous. Like I said, we're going to factor all of the trades. There are a couple different ways that you could manage this, and again, we'll come back to that in a minute, that would make this an opportunity rather than a fault, but per the base rules, this is a -1R. We go into the next one, which the sellers tried to get a rotation to the downside and the upside. They couldn't make up their mind. We had the high was here and the low was here, and you can see what they ended up doing. The major low was down here, mind you. They trapped the inside little minor low. This is a non-confirmed swing. Love those traps, those good old pick your pockets, right? The pip traps. Stopped them all out. Ripped all the way back to the upside. On that rotation down, there was nothing. There was no patterning. There was nothing to work with. There really wasn't anything to do. That said, there will be some sellers who would be looking for a continuation, but from a pattern perspective, there just wasn't anything there. Nothing set up. Now, after that made, that little kind of W inside there, they poked the low and went screaming all the way back up. And one of the things that we were talking about at the time is how we have a lot of interest in both sides. Buyers are trying to buy low, sellers are trying to sell high, and we've got this back and forth really whippy, choppy, sloppy that we're seeing. And when we finally start breaking above the highs or breaking below the lows, well, chances are we're going to be not so likely going to, well, it's probably not going to break out very far. We know how these ranges work, right? When we go into a range and they break, typically not going to go very far. But you'll notice when we started cycling back to the upside, again, we're not taking into account any common sense, and this is why. This is a really nice positive 2R bounce 3 to the upside for a continuation on that little trap on the lows. Now, from a psychological perspective, I really like this one. This setup really, really nice for a continuation face up. It was everything that the bulls wanted to do. Everything. The sellers lost their grip. They got trapped out. They missed the high, so it looked like it was going to flush down through the floor. And then it just ripped their face off and went screaming to the top. Just picture perfect squeezing, which is why I also have that little area marked up there. Now, this area is not a pattern. It's not a setup, but this is a residual squeeze of what happened over here, and very similar, but you can see a lot more on the failure side. We have this continuation phase to the upside. The bulls tried to get that follow-through squeeze and rotate to the upside. They made a very quick new high, and this one, compared to this one, had absolutely no follow-through and dove straight back in. So when it fails in like that, well, realistically, a lot of bulls are going to be kind of nervous, but we want to see, is it going to still get the follow-through? Maybe it was just a false break. But then it can't even get back above it. Or if it does, it immediately fails back down. There's some problems, and bulls start quickly jumping ship. So there is a really nice little squeeze for a long play inside here for just small scalps. But it's not necessarily a pattern. It's just kind of a piggyback off of what happened over here, but without a pattern, more just on the order flow side. Now, when the market did fail to make that next leg up, well, that was a massive failure with another lower high, rotated all the way to the downside, and we had a beautiful continuation lower. With the continuation lower on that drive down, it's difficult to see, but we had this really, really nice transitional phase, and it was fast. Real quick pop up, real quick slam right back down again. Very, very fast, but again, a nice little bounce 3 for another positive 2R. Really good rotations, really solid movement. Obviously, a lot of these have plenty of room for excess when they do want to work out. But just at the minimum, a 2-to-1 is not too bad. Definitely not going to be upset by that. The sellers failed with the continuation to the downside. This was their shot. They rotated above the highs. The sellers tried to take it lower. You can feel the balance point. They're trying, and nope, they lost their grip. So you can obviously see what happened after they lost their grip. Longs start coming in, and they look for a continuation back to the upside, this time on a bounce 4 for another 2R back up. So, overall, it's a really, really straightforward day, all things considered. 4 patterns, really kind of laid back, relaxed, nothing too crazy. A total potential of 5R, but one of the things is like, well, okay, these patterns are there, and we looked at all of them, good and bad, but is it something that's actually tradable? Is it something that we can actually utilize? Well, these are the entries that I had in the room today with VIPs and members, and we were talking about these different zones, and you can see what I wanted to talk about here is the management differences. Now, you know me, and if you've been around for any amount of time looking at or watching any of the videos, I'm not a huge fan of all in, all out. I'm not a big fan. I like building into positions. I like building out of positions. It makes it a lot less stressful, but it does require a little bit more capital to make work, which is why that is not at the forefront of what I'm talking about here. That said, you'll notice that the original entry point was there. You'll notice instead of stopping out, there were more entries buying into the dip because all this was an at the open over pulse down to an L3. That's literally all this was. And we were talking about it at the time and how this L2, it's 932. We're right at the open. There's a very good chance that we get an extra overdrive to the downside. And you'll notice where the majority of the exits took place, right back around that break-even point. So again, there's a lot of different ways to manage it other than just a full-out stop-out, and you can turn them into opportunities. But per the rules, that is still a negative 1R. The continuation followed up after that for the 2R. This is that squeeze play that we were talking about, as well as the continuation to the downside and the squeeze back to the upside. So, I mean, pretty straightforward, And the S&P also did have a couple scalping opportunities. But the key takeaway here when we're looking at all of this is, what do the numbers end up as? right? When we're looking at the trading and all of that kind of stuff, I want to make sure that our trader's math, like we always talk about, is solid. If our trader's math is off, we know something is wrong. And so with that being said, we can look at the trader's math for today. I only want today, though, not all the way back to last week. Let's go back to today. Not that it's really going to do anything, but anyway. So looking at the math for today, at least as far as a trader's math perspective is concerned, we can see that we had a 92.31% accuracy. That's obviously going to be a very good number, but 7.69 times the losing side, average loss of 33. And we have the winning side, 92.31 times the average win of 25, minus the losers, which gives us a positive trader's math of over 2,000 today. Really, really solid day today, and I don't want to say it's a record breaker, but for a Monday going into the end of November, beginning of December, that's not too bad, you know. And the key takeaway here again is that we want to make sure that nothing's out of whack. It's always nice to see big positive numbers and trader's math that's in the solids and all of that. But really, what is this telling us, right? We need to make sure that we're understanding what's happening here. If we're looking at the trader's math, this is telling us that we're doing things correctly or incorrectly. That's really what this comes down to. A good, normal day historically, at least for me, and everybody's trader's math is going to be different. But historically for me, if I'm scalping, it's usually in the 600s to 800s. And if I'm swing trading, it's, you know, like 1,000 or 1,200. That can be a give or take, a little bit above or a little bit below. So a trader's math of 2,000 is a really good day, and that tells us that everything was on par with what we would expect. And we can see why. It's the percent accuracy was very high today. But, you know, that aside, we also have to take in the other things of consideration. The average winning trade was 25, the average losing trade was 33. So it's very important with that 0.75 risk-reward ratio that this accuracy stays high to maintain a positive math. Now, it's also important to note that the largest winner, largest losers, 52 versus negative 33, there's obviously some differences on the tail ends there, but the overall math is very important to go through and figure out so you know that you're doing things correctly or incorrectly, and, you know, you can kind of go from there. So those are the pattern setups on the Nasdaq. I know I did also have a request to go over the S&P and some of the 5-minute opportunities. You will notice that I did have a trade on the S&P today. The S&P was right there. Now, it was only a scalp. There were a couple times where I was trying to get another fill outside of that, but it didn't actually form. The big takeaway here that we have as far as the S&P compared to the Nasdaq, because there are going to be some heavy differences. The S&P, when we're zooming out to the larger perspective on the cliff, has had its pullback underneath the fourth wave. So, what does that mean? Well, when we were looking at the NASDAQ did not have that. They missed the whole thing. They didn't even get down to the bottom of 4. They kind of reached out and they missed it. So, the S&P has a more valued pullback. Traders have been given the opportunity to buy at more value on the S&P than they have been on the NASDAQ. That's a good thing and a bad thing, depends on the perspective. That could demonstrate that the NASDAQ is still in a flurry where buyers are really aggressively ramping it up, and it can't pull back because they're picking it up too quick. That's one way to look at it. The other way to look at it would be that the S&P had a really nice value, and they were able to buy it on sale comparative to some of the other indexes. Either way, what we have going on here is a really nice dip into the bottom of wave 4. It's a 1, 2, 3 move down, A, B, C, D. Nice and easy. That doesn't mean that they can't have a 5th wave down, but we've completed the cycle all the way down to the previous 4th wave low, which is really at the minimum what we would like to see. It made it to the bottom of it, which is nice, and now we bop right back above it. I mean, look at this. And as soon as it popped back above it, it acts as support. So, you know, again, the trend bias, technically speaking, would be down. The market is making lower highs, lower lows. Even the moving averages are pointing down and cross lower. But there are definitely some considerations as to what's going on here on the S&P for the bulls to kind of play ball down there. From the 15-minute perspective, this is a large zone of interest that, again, I've been waiting for all morning and it hasn't happened. I've been waiting to see a pullback for the longs down here in the 4600s, but they wouldn't. The closest they came down, they couldn't even hit the L1. So, total miss. But, you know, it is what it is. SOCKS, right? As long as you can spell socks, you'd be all right. You got that bull rally up. They're testing the L3s, a logical position point that buyers are going to be looking for then would be to the upside towards the top of this now megaphone with an overshoot. I would still love to see a dip down in the 4600s, but that doesn't necessarily mean that it's going to take place. Right? If we're looking at the 5-minute with the S&P then with that perspective, noting that we've got a little bit of a mixed bag, both are opportunities for longs and shorts. We start off today with a relatively large gap to the upside going into the previous day and gapping above. That's an outside gap up after a really big down day. That's like a 2% down day. And it gapped above it. So that's a big deal. You know, that's a huge deal, the fact that they're gapping above that. That's a lot of strength. So we have to ask ourselves, in that move, overall, did they create any balance points of interest that we can possibly utilize? The only one down here is 4,600. But before they could make it down there, they hit too many objectives. Right? The buyers are kind of creeping it up. We had a small little flag for a continuation. Scalps had some opportunities. But they eventually broke down, had a two-legged correction lower. That two-legged correction lower only made it to the top of the structure. Normally, I like drawing structure across the highs like this, but I mean, it poked the top and just ricocheted right off. Gone. And after that, I mean, you could look at this. Insane. So, I mean, as far as opportunities on the S&P, what is there? You know, I mean, yeah, I had the one scalp, but if we're looking to break this down in a little bit of a different way as a primary focus, the S&P wasn't mine today. But we started off today with a nice bear transition and a beautiful bear bar down after an outside gap up with a down day that's down over 2%. I mean, let's be real here. That's a value for a lot of shorts that they're going to be trying to sell into that continuation. Out of all of them, we know that the S&P can go either way. And it was a really strong drive down, so shorts are applicable. I obviously wasn't very pumped about it, but we were talking about the prospect of shorts looking at areas of interest down here to prove whether or not we're on the right track. So we can ask ourselves, did sellers find a response down here at the scalp target? I think it's fair to say they did. So realistically, even when it went through, it acted as resistance for a little while. We know that we're on the right track. Right? We know that the sellers are scalping out. They reach down, they hit the 1-to-1 objective, and then it rotates off with the final wick ending there. I mean, come on, right? So the bulls are obviously screaming to the upside after that. And as far as any opportunities beyond, I mean, they didn't break structure until over here. That barely pulled back. I mean, that didn't even pull back. It just went sideways and then continued up. So, I mean, really, it's either you buy on like a bear bar, let's see it, maybe below a previous candle if you waited for 3 hours, or there probably weren't very many trades today on the S&P if you came in late. If you were trading earlier in the session, there were some opportunities to, you know, kind of play back and forth. But after that, it was tough. I mean, it just went straight up. What do you do with a market that looks like this, you know? You're left either being incredibly aggressive, buying super far up with a massive stop, or you just don't take any trades, you know? Not really much fun either way. So the S&P was a little bit awkward today with how it's set up. I mean, it's set up just with a straight up move to the sky, but you know, it's definitely there. All right, let's see. We got that taken care of. Where's the Nasdaq now? Still going up. All right. Probably not going to change until tomorrow. So if you have any questions or anything you want me to get covered for you, feel free to drop those in. While I'm waiting for those, let me take a look here and see what is going on over here on the crypto side of things. Because one of major interest, and we were talking about this in the Discord room as well, we heard an announcement that that AMC is going to be giving away NFTs for pre-orders to tickets. And they're going to be dropping those NFTs on the WAXP network, which is WAXP. So the WAXP network definitely has a lot of my attention right now in the way that it's kind of moving. It's setting up very nicely. We've got a lot of back and forth. It's got a beautiful pullback with a two-legged corrective phase. I mean, it's doing everything that it needs to do. It's even down right now. It's still down 5%. This is the kind of stuff that I like looking for. You know, when we've got really, really big news, we've got structure, which is demonstrating that the market wants to attempt a rotation back up. The risk is definitely favorable to the upside, so I like it. This is one that stands out big time. as far as the Wax network goes, especially noting how far AMC has been, known to cause things to go. There's a little bit of hope factor in there for sure, but the fact that AMC is launching NFTs and they're doing it on the Wax network and all of that, I mean, it really shows that adoption is definitely coming. It's around the corner. And this kind of stuff, with an NFT network that has 74 cents as a as a tag, that's crazy. Another NFT network, Rarible or Rary. I don't know if they have. Yeah, it's just USD. Rarible's another one, but that one's in the $22 range. So pretty big difference there. Hey, Bram, how's it going? Good afternoon. Good afternoon. So these are the ones that we are, Wax is kind of a big one. That's on the list. That's on my hit list of keeping an eye on. Outside of that, Crow is obviously still on the list. Crow will pretty much be forever on the list. But one big thing that the Crypto.com network and Crow network as a whole has launched is the partnership with the Kronos Bridge and VVS and DAO staking and, oh man. They went and took their DeFi wallet, which was still really good. I mean, their DeFi wallet was earning 12% on average, pretty effectively. And you're not going to hear me complain about 12% APY, right? But that next step up with VVS and I mean, you're talking like 8,000% APY. I mean, it's just stupid. It definitely has my attention. It's gone down since then with the hype train, obviously. But Crypto.com is always going to be on my list, so whenever Crow's on a dip, you better believe that's on my hit list for sure. Nexo's another one that's of interest, but Nexo's a little bit of a slower one, more of a savings account, longer-term hold, that kind of thing. And another one that's kind of interest as well, creeping up, is Cake. Cake is one that's designing and building apps that are a lot more simplistic to use. So I mean, the fact that they're creating things that are more user-friendly, apps for the phone, and that's one of the big things that DAO just they need it to be easier, right? Because one of the biggest setbacks of all of that whole genre of crypto is it's such a like when you're first getting into it, you've got to read through like a box and a half of books to try to figure out what you're trying to do. The FAQ page is like 7 miles long. It's confusing. He's like, oh, well, I've got to have liquidity, but to get liquidity, then I've got to use these coins, and then am I buying it? Are they gone, or what's? It's very, very confusing. So seeing networks like Cake and Crow and all of these big sustainable networks creating things that are easy to use, Olympus might be another one. I don't have any experience with them personally, but that's what we need. That once they start making it even easier for mom and pop to do it, then we're talking more adoption, more mass adoption, and more and more and more and more and more. So, very exciting for sure. But I'll have to check out Olympus. I haven't heard of that one. But yeah, I mean, 7,000% APY. I posted a screenshot in the Discord chat not too long ago that you probably saw as well with the VVS platform. It was like 8,000 something percent. It's ridiculous. Like, man, and here we are. The banking industry is like, hey, if you have $1 million, we'll give you 3%. Whew. Man, you got 3%? How did you get that? I mean, it's a joke. When you're comparing it to the crypto side, it's like 3%. Man, you're staked in the wrong things. What? Oh, yeah, that is a bit of a setback. Being on the ETH network, that's so frustrating. But, again, SOCKS, it is what it is. Nothing you can do about it, aside from hope that they develop on other chains. But either way. Hey, Ace, how's it going? Good afternoon. Everybody else so far, good afternoon. We did our morning wrap-up. If you're joining in a little bit late, we start at 1300 Eastern. We go over all the patterns and everything that's set up today, taking a little bit slower, looking at all of them, not cherry-picking every single one, even if it was good or bad. and we talk about all the setups that took place, as well as the entries and kind of what's going on. If you have any questions or any markets you want me to take a look at, feel free, drop those in. Going at about the 30-minute mark or so, we'll start wrapping it up sooner than later, and kind of get going from there. Obviously, one of the big things that has changed are the hours, and we can talk about that for a minute. Going into the end of 21, going into December, obviously, there's holidays and all of that going on. That's going to make the hours and everything a little bit awkward and weird. So in order to prepare for 2022... It's ridiculous to even say that. We're working on moving things back to the norm, or what was anticipated or supposed to take place with a YouTube membership, which is from 9 in the morning to 9:20, or 9:30 or so. It's the morning prep session. It even says it in the description. We just never did it. I couldn't get it to fit correctly. Anyway, we got it to fit correctly now, so we're doing the morning session for the YouTube members in the morning. We've got the VIP room going on now for 3 hours a day until noon, and then we've got the afternoon wrap-up, which is where we're at now for any questions or anything like that. Of course, we do a little bit of marketing, but if you have any questions or any markets you want me to take a look at, feel free. Got a little bit of time left. Hang on one sec. All right. I tell you, the ETH network. Don't get me wrong. We're big fans of Ethereum here in SSFTG. We're big fans. We've been talking about Ethereum for a real long time, but I am not a fan of the fees. 100% not gonna lie. The fees are garbage. I was trying to transfer. I had $20 in my trust wallet. Okay, so let me rewind. XYO, and I'll have to do a video about this. But XYO is the network that you geo mine, like geocaching, and you mine blocks and all that kind of stuff. I signed up for a month. It was like $35 for a month or something like that, and I ended up getting, I don't know, it was like 50,000 or whatever in-house coins. Ended up being like 360 something XYO coins, which are now actually live and tradable on Binance. So I transferred them out of the XYO app on my phone to my Binance wallet. They're on the Ethereum network, and that many coins, like 360 coins, it was like $20 or something like that. To get it off of the XYO app over onto the Binance wallet was totally free. No problems there. They sent it over, didn't bother them at all. To send it out of the Binance wallet, though, is $70. To send 20. What? Nah, I'm just going to leave it there. I guess XYO to the moon, baby. We'll just let it stack. I'm not going to transfer that. That's ridiculous. So stupid. So something's got to change. Something's got to give or move or modify or something, because people are going to go off-chain. They're going to go off Ethereum. They're going to go into other, more affordable ones that aren't ludicrously expensive, that charge you 3 times the amount to send something. I mean, you can send, what was the biggest transaction in Bitcoin cost like 81 cents? Millions of dollars. Ethereum, that would have been like a $7 million transaction. It's just, it's such a bummer too. Ethereum, it makes me think that people are going to look at ETC again, Ethereum Classic, and try to go back to the old roots, or look for off-chains like ADA, Cardano, looking at Crow now with NFTs, and Engine, and Sandbox now developing in-game apps and all of that, and Gala. All of these different things are offering so many development options now outside of Ethereum. I just don't get why people keep using Ethereum. It's probably just because it's still the easiest to integrate with everything else, but man, it's such a bummer. Yeah, and see, that's the thing too. AVAX went from like $20 to the moon. The fees there are now incredibly expensive too. Not out of choice, but because the coin just went up a bajillion fold. Right now, moving my Crow coins from my DeFi wallet to the Kronos app and staking, and it costs 0.002 Crow. That's hundredths, if not thousandths, of a penny right now. But later on down the road, that could be $5. It can still make a difference. Now, granted, $5, I'm totally fine with that, compared to 70 or 80 to transfer 20. But just saying. Pay a whole AVAX for a transaction sometimes? Oh my god. Ethereum's the same way though. It's not any better. That's the thing. When they scale up and they ramp up so aggressively, it's that initial impulse. It's that initial blast of volume. Once they work through it, then it steadies down again. It's just, it hasn't stopped coming in. It's constant influx of volume. It's a good thing. Crypto market to the moon. But like I was saying, there are a lot of changes in terms of what's going on. One of the big ones, of course, you'll be able to see right in the main page of SSFTG, and we've got all that covered up there with the trial registration and all of that. But I'm not seeing any other questions coming in or anything, so yeah, that's going to do it for this one. I hope you had a fantastic morning. I hope the morning prep for you YouTube members worked out really well. Hopefully it helped out this morning and gave us a little bit more of a directional bias. And we had a chance to kind of check out what's going on with the markets, what we're kind of anticipating going on, and got some questions taken care of. Now, remember, right, a little bit of sales pitchiness here because, you know, we're at the end and we got to put some bread on the table too, right? The market's incredibly confusing. It's frustrating. I get it, right? Maybe you just hit your stop. Been there. To the tick for the second time. And you're 2 seconds from smashing your monitor in half, right? We've all been there 1,000 times. Consider saving yourself the cost of a monitor and jump in the 1-week trial. It's totally free. You get to hang out with me and the other VIPs in the live trade room every day from 9 to 12. The VIP room is open from 9 to 12, so we got 3 hours, 3 solid, strong hours of trading going on every single morning. And along with that, trial members can also schedule a 30-minute call with me to sit down and talk about any questions you have before joining up. Now, we already know that the market is confusing and frustrating, right? We just said that. But approaching it without a plan makes it more like skydiving without a parachute. Maybe trading's brand new and you're trying to figure it out. Or you just need a solid trade plan to get you on the right foot. Check out the Day Trading Academy in that case. The Academy is loaded with 19 plus hours of video material to teach you why the market just sucker punched you. And so that way you can learn to dodge it next time. We learn best from our mistakes, right? Along with that, if you pick up the Academy, you also get the upgrade coupon. So when you're ready to move on to one of the 3 VIP packages, you get the cost of the Academy taken off to boot. So it's kind of like a win-win. Now, if you're looking for a way to join me during the New York Stock Exchange Open, we talked about it a little bit, but there are 3 different VIP packages, and as I said earlier, we run from 9 to 12 every single day the market is open, unless something's going on, or family vacations, of course, I'm human. And VIPs have permanent access to that live trade room included with the membership, so you don't have to worry about the stupid extra fees and annoying monthly membership bills and all that other cart. Now, all 3 VIP packages come with live trade room access, but to really ensure that you're on the right track, all packages also come with anywhere between 3 and 10 1-hour calls with me over Zoom, depending on the tier that you choose. And this is going to help us get your computer set up, the charts set up, key bindings, everything else, get ready to rock and roll. And along with that, we'll also be able to work on a personal trade plan, questions that you have along the way, and anything else that you want to talk about on the calls. VIPs can also purchase even more of those time calls and time slots. And for this, of course, those time slots are limited because I'm human. That's kind of how that works. Now, VIP Plus, that's something of a little bit of a newer introduction. VIP Plus and VIP Elite packages also come with a huge added safety net for new traders, which we are calling the APN Plus Network or Refund Network. And this allows you to create a safety net that you can rely on should things go south in your trading. Listen, right, we know the stat. Like 90% of traders lose, right? At least their first account, they end up blowing up. And this allows you to create a safety net that you can rely on if something bad were to happen. Not to mention, if you're going through and you want to read more about it, there's more info. But you gain rewards the longer you go without using the APN Plus refund. So even if you don't ever end up needing it, you can just refund out a couple years down the road with some nice extra bonuses and perks and take a vacation with the family to celebrate the trading. Right? Now, if you want more info on what the APN Plus is all about and all that fun stuff, check that out on the APN Plus guide at the top of the main page over on SSFTG. If you're looking for more budget-friendly approaches to fit the needs during, the holiday season, not wanting to blow the entire holiday budget all in once, we do also have payment plans for VIP access ranging from as little as $84 a month for 12 months. So don't forget, we also have the 1-week trial registration as well, so you can see what that's all about. And that's right in the description page underneath the stream here. It's also on the main page of SSFTG. If you need any info about becoming a member or anything else, you've got some markets you want me to review, some charts you want me to take a look at, shoot me a message at my email, jhb@ssftg.com, and I can help you out from there. Of course, we are going to be doing this every single day at 1300 Eastern, so Bring your questions tomorrow as well, or charts or trades that you want me to review for you, and we can take a look at those as well. But that's going to do it. So have an amazing rest of your day, and we'll see you all in the next one, all right? Enjoy. Successful first day of the new schedule. I think everything went pretty well, and we'll rock and roll on tomorrow, all right? So enjoy, rest up, and we will see you all in the next. Have a good one. Thanks.